And now, the Kill or Be Killed podcast with Damian Ross, founder and master instructor of the Self-Defense Company.
Hey everybody, welcome to the Kill or Be Killed podcast. I'm Damian Ross, of course, and today I've got my good friend, longtime friend, Mike Mitchell as a guest. Mike is a West Point grad from 1997, graduated ASU Law, served as a legal fellow for Senator McCain in Arizona. I was assistant prosecutor for Arizona Attorney General. Let me know if I get anything wrong, Mike. And also prosecutor for Maricopa prosecutor's office. I just repeated prosecutor twice. Very good.
Arizona Attorney General's office and the Maricopa County Attorney's office. Yeah.
Perfect. Thank you. You got all the currently, which is exciting. Mike's a tax attorney, believe it or not, and he focuses on protecting both businesses and individuals from IRS aggression. If you need Mike's assistance, you'll see his contact information, his email in the description. And that's it. Hey, man. How you doing?
Good. How about you?
Living the dream, usual stuff. So, dude, so let's talk a little bit about, what you do now and then, your journey to that, to where you are today, because it's extremely some interesting stuff going on. So, defending, individuals, against IRS aggression. I love it. Very cool.
Well, and so the IRS has one mission, and it's to collect tax money, right?
Right.
And so they have a lot of legal advantages. In fact, I think that the playing field for for civil tax and tax collection is stacked so much more in the government's favor than, for example, prosecution is. Like criminal defendants have way more rights, they have way more protections than most taxpayers do. Right. And the IRS is very aggressive. It goes after, and it goes after everyone, make no mistake. I think there are a couple groups, it goes after more than others, but, for example, it audits very poor people, right? Because they get refundable credits from their tax return, and so it does that to protect the integrity of the system. So, but they get audited.
What do you mean? What do you mean refundable credits?
So, a refundable credit is, let's just say, if you don't say you paid tax, right, and you say you paid $5,000 of tax, and you have low income, you have a lot of kids, maybe you're a single parent, and so you take certain credits on your tax return.
Right. Sure.
You actually get the taxes you paid back.
Right.
Plus you get, additional payments. And kind of an example of this, the economic stimulus payments during COVID were not necessarily refundable credits, right? But that's the kind of payment you get, right? If you're in certain income levels, usually it's the earned income tax credit, and it has to do, it basically helps out people. And but there's a lot of issues, and there's fraud in that system, right? So maybe there are taxpayers who claim that credit,
of course,
and they don't, it's not actually their child, or they didn't actually live with them. There's all this criteria that they have to meet to be eligible for that credit. And so they get that money back, but then the IRS audits that to maintain the integrity of the system. On the flip side, most of the people that we help, we can't unfortunately help those people because, the amount of what they owe the IRS or what the IRS is after would be eaten up in fees very quickly. And so it costs more, to hire us and do that. But on the flip side, I think, the IRS really looks hard at small and medium-sized business owners, high net worth professionals. And it conducts very aggressive audits of those folks. And so, and those can lead to, either be resolved through the audit process be resolved in appeals. And kind of ironically, right, when you appeal, you're just going to a different division of the IRS.
Okay.
Right? It's one of the few aspects in the legal system I've ever met where like the agency controls the appellate branch too, you know.
Right. So for example, in criminal court,
right,
it goes to a completely different system, correct?
Yeah. Well, so a different court. Yeah. And there's multiple layers of review. And then, so there is a tax court, there is judicial review is available with tax issues.
Okay.
And something very interesting about U.S. tax court, and most people don't know this, but the United States tax court takes place in various district courts around the country, U.S. district courts. Okay. And there's special U.S. tax court judges, and they hold court all over the country. They travel around and they hold court on tax issues in the district courts around the country. And a taxpayer, so you're in New Jersey, and let's say, so once a practitioner is admitted to U.S. tax court, they can represent taxpayers in any U.S. tax court.
Okay.
So if you, for example, wanted to hire me because your business was being audited by the IRS, you as the taxpayer, the IRS will actually let you select the jurisdiction. So you could litigate in Newark, New Jersey, or you could decide to litigate in Phoenix, Arizona.
Right. And you can defend.
We can represent you either.
You can represent anywhere.
Yeah. Okay. Yeah.
Now, how does that, how does that work? Like, let's say, I get, all of a sudden I'm getting audited. I mean, I'll obviously talk to my accountant first. And then, if I need you to come in, you're the one to come in. I guess the question before that is, what, and I know there's no one single answer to this, but what are some triggers that you can think of to get you freaking audited, that you see time and time again?
So, well, one trigger, obviously, it's pretty well known that if you have a Schedule C, right, which is with a small business income, whether it's like an LLC, what basically is called a disregarded entity, which basically means like it's a pass through, and oftentimes it's a Schedule C, but maybe you also file like you have it done as an S corp or something. I don't want to get too into the weeds there, but anyway, that's a big flag, because we know that people with Schedule Cs have higher audit rates, right? Then there's other things like some of the more intense stuff that we do, or not intense, but complicated litigation is, for example, like defense of captive insurance companies and things that
what's a captive insurance?
The IRS considers reportable transactions.
Yeah.
So
I'm sorry, what's a captive insurance company?
It's complicated, but basically it's a company establishes an insurance company that it wholly owns, and it pays itself premiums, and premiums are deductible. And the IRS does not like these arrangements, and it aggressively targets them with audits and tax court litigation. But I want to circle back to kind of your original question, because those are kind of, that's not although we specialize in defending those cases, the more common thing, right, is you have a small business, you get audited, your high net worth, you get audited. And you asked, well, what do you see? Are there flags? A Schedule C is a flag, right? But, there's a number of ways that they could end up. For example, maybe someone has a bad CPA, and that CPA gets on the radar of the IRS, or maybe it's not a CPA, maybe it's a tax preparer, right? Yeah. And then the IRS may start looking at the clients, because it knows that, oh, well, this tax preparer has not been, has been aggressively claiming this deduction, or he's been overstating expenses, that sort of thing, right? And so that there are a number of ways they can end up looking at you. like I mentioned, the EITC, the Earned Income Tax Credit, that's a high risk of audit for lower income taxpayers. But Schedule C on the other end is also a high risk of audit. And I think one of the things that people need to know is that one of the worst things you can do if you get a nasty gram from the IRS is not respond or ignore it.
Right.
And not seek counsel. Right. So, that, because kind of the longer you wait, the more difficult it becomes to resolve the issue. And then if there's penalties, right, and there's taxes due, interest is accumulating. And so the amount you're owing is getting larger every day.
Right, of course.
Another thing we do a lot of, and we see a lot of, and if you look at studies on the IRS website, these are the two most common penalties that all taxpayers face: is the failure to timely file a return, and then the failure to timely pay taxes.
So basically, if you don't file an extension, if you just miss filing your return, I mean, if you file an extension, everything is on pause, correct? It's like accumulating interest and things like that. You're just saying we are filing, right? Because we file an extension every year.
Right.
But we also file every year, if you're listening. So so what you're saying is like, look, if you don't file, and then if you owe money and you don't pay it, you're going to get audited. I mean, that to me seems like a no-brainer.
Well, you may get audited, but you may just get a pretty substantial penalty, right? Because people don't realize that the late filing and the failure to pay penalties are pretty aggressive, and they mount up pretty quickly, right? So if you have an S corp, right, and most people, like you said, will file an extension, so it'll be due, but you miss that, and you start to, each month you're getting penalized,
right?
And those build up, and then there's interest, and so after if you're a year late, 2 years late, that's a pretty substantial penalty,
right,
over time. And so those are some things. Another thing that we're seeing, where you can get very substantial six-figure penalties as business owners, is the failure to file timely forms W-3, W-2, right, annually if you have employees. Right. And those match with the Social Security. And if there's not a match, you get a nasty gram. Now, the IRS will give you chances to correct, but if you don't correct, that can add up pretty quickly. So if your payroll, say, is, $650,000 for the year, you could end up with a $65,000 penalty on that.
Wow.
And same with, like, if you're an applicable, another form, and these are new, 1094, 1095s. These are Obamacare forms, that are required to be filed. And mainly if you're a large employer, meaning over 50 full-time employees, you have to offer health insurance, and then you have to do those reports. You don't file those returns, which generally are due March 1st if you file electronically each year for the prior year. There's huge penalties. It's like $250, $260 per form.
Wow.
So, you can end up in the six-figure penalty column on that.
Now, let's say you're you get targeted, and you don't earn a lot of money. And again, what you're saying is, from what I'm gathering from you, is that it's less likely that you may get targeted if you're a lower income, right?
Right. If you're, I think, if you are like a lot of people, right, where you have a W-2 job,
right,
you have, traditional bank accounts, you have some stocks, so you have a mortgage, you use a reputable tax preparer, you can, you probably have a pretty low chance of, even if you, use some of these online, TurboTax, and
those are pretty boilerplate from what I'm gathering. I mean, they're not really getting aggressive with how they file.
Right.
I'm like, it's pretty vanilla. So let's say you do find yourself in an issue. And for some reason, if you're running a business and you don't have an accountant, I don't know, you're insane.
You would be surprised how many people do it, though.
And I'm going to tell you, my guy, like, there's so many, and I've gone through several in my life to find one that is like understands, what my needs are and the reality of what we're doing. So yeah, you're nuts if you don't. But if, let's say you don't have, let's say you don't know anything about it, and you get some letter, again, like you owe, shit ton of money or whatever to you, a lot of money to you, and then you see the penalty and the interest like right on the next line, and they're like, send your check. What do? What's the first thing you do?
Well, I think most people, I think what they actually do is they either panic or they bury their head in the sand.
Right.
And, and hope the IRS will go away. I promise you, they won't go away.
They may be slow as hell, especially now after COVID, dude. Like, no shit, I've got a refund due, and I keep getting letters that, another 60 days, another 60 days, another 60 days. And I'm like, all right, there's nothing my accountant can do about anything. So, it's like half a year of college tuition coming back, so it's frustrating, but yeah, eventually though, they'll get around to you.
Yeah. And so the interesting thing, right, too, is just kind of like when people get a refund each year, if you get a refund each year, that you're essentially giving a interest-free loan to the government, right? Because, the government's got your money and they give you the refund. They don't pay you interest if, you get it timely. But I'm seeing some things now, like, for example, one of the things we're doing is analyzing the employee retention tax credit that was passed in COVID for small, medium-sized businesses. For people that are interested that might qualify, and there's some criteria. But when clients get those refunds right now, because they're from 2020 and 2021, those refunds are coming also with interest payments. So the government's actually paying them interest. So when you get your refund, you may get interest with it.
And but it ain't at 8% like I should be getting.
No. But the important thing to remember is that interest that you're getting is actually, and the notices, if you read them, the notice tell you it's taxable interest in 2022, and you have to report it on your tax return. It might be $10, might be $15, but the IRS notice actually says you got X. This is the interest payment, and you need to report it as taxable income for the year.
So again, the first thing you do, or you should do, is probably contact an accountant.
Yeah.
Right.
I mean, look, if you're operating a business, to your point, and you don't have a good accountant, a good bookkeeper, you need to get one. Number one, before you get any notice. That's flat out, right? If you're, I mean, even if you're getting a 1099 and you're making, most of your income from 1099s as a contractor, you should have a good accountant, right?
100%.
So,
and depending, if you're an individual, to jump just based on my experience, you'll pay, I don't know, to file anywhere between $500 and $1,500 per you and your spouse. Business, I've been around right now, and I'm around $4,500 for two businesses, and then, which is a little on the higher side, but I had guys try to charge me like $10,000, in the past. So, and then I've had as cheap as $2,400 for both. So, but it's for the amount of aggravation and also the liability, because now accountants also share liability with, if they file something and it's shit, they're on the line too. So now when do you get pulled into this whole nonsense?
So we typically, it depends on when someone, like I said, a lot of people ignore it, hope it goes away. It won't. That's probably the worst thing you can do. Bury your head in the sand, pretend like it's not there. Also a terrible thing. the sooner you get us involved, the sooner we can help find a path to resolve it,
Okay. So if
And-
I get a notice, I can call you first?
Yeah, sure.
Oh, cool. All right. So you don't have to call accountant, call Mike. There you go. And it
Yeah.
doesn't matter where you are in the United States.
Right.
You reach out because it's the IRS, it's federal. What if it's a state issue?
Well, so with state issues, a little different for us. So we have attorneys. I'm not licensed in Nevada, but we have attorneys that are licensed in Arizona and Nevada primarily.
Mhm.
So we're limited to dealing with state tax issues in Arizona and Nevada.
Okay.
We don't do other states' tax issues unless some states, for example, in Arizona, you can actually represent people in front of the Department of Revenue if you're a licensed IRS practitioner. So,
But if you're getting these notices,
yeah, if you're getting that notice.
and this is the taxpayer. We previously said about your inquiry. Although we try to respond quickly, we need some more time to provide you with a complete response to your inquiry. Please allow another additional 60 days.
60 days.
This is for my refund, and this one was from April 5th.
Mhm.
I got one from. I got a whole bunch of them here. I just collect them because this was.
Let me ask you this:
August.
did you paper file or did you electronic? Do you know if you paper file?
Electronic file.
Electronically?
Yeah. What am I?
Well, no. A lot of people, the paper, right? So I think the IRS was struggling, right? The IRS is a 20th century bureaucracy, like a lot of federal bureaucracies, right? It's struggling very hard, like a lot of other agencies, to adapt to the 21st century.
Yeah, and they also got flooded with COVID and all the.
I think they were struggling before COVID, and COVID just, it burst the dam, right?
Yeah.
I mean, those 60-day letters, I call them the 60-day letters now. That's all you're getting. I mean, it takes things that should not take very long. You're getting 2, 3, 4 of those 60-day letters.
Yeah.
And then, this is crazy. So we recently sent something to the Ogden, Utah Service Center, and we checked up on it. And the Postal Service sent us a thing back and an email. And it talked about how basically, well, it got delivered and it was signed for, but there's so much mail that gets delivered each day. It's, dumpster type things full of mail, right?
Yeah.
And that it's impossible to sign for each piece. So they basically sign in batches of 500 for all this.
Yeah.
So, and then it can take 2 to 4 months after it's actually delivered to get into the IRS system. That's basically to open it, scan it, and, process it. So, they're really operating on, I kind of compare it like this when I was at the county attorney's office and I started there in 2010, and they were operating, the IT department there was operating on a case management system that was built in the 90s.
Okay.
Right. So it was very antiquated and very ineffective, and it was built in-house, but the 30 people in that department were, that's what they knew. That's what they were comfortable with.
Sure. Right.
We asked them to find out if there were any out of the box solutions that we could buy commercially. They came back with a presentation that said, nope, not possible. No one could possibly, the only thing we can do is, rebuild this in-house. And we were more comfortable than prior administrations with technology, so we didn't accept that answer. And, fast forward, ultimately, we let them try the in-house rebuild option, which
by the one IT employee that's been working there for 30 years, who probably
we contracted with a reputable, And long story short is a few years later, it's not a perfect solution, but we did get an out of the box solution that replaced it. And by all accounts, definitely has flaws, but was working a lot better than the in-house antiquated system. And I think, it's just so like, I think most of the problem that goes on is a technology problem, right? And then you have people saying like, well, oh God, TurboTax is so evil. And like, and like all these or
How is TurboTax evil?
well, because it charges people, like particularly low income.
Right.
There's this movement out there that says, oh, the IRS should basically have like, you should be able to file through them.
Right. And claim your deduction. So IRS should have TurboTax.
Yeah.
Should provide TurboTax for free since they are.
Yeah. Right.
Right.
And
TurboTax getting the benefit of it.
Yeah. And so, which I'll fully admit, I use TurboTax every year to prepare my own taxes. So
right, and I think you're a little different.
Yeah,
but I also think, again, like, I'm sorry to like, but if you're a 1099 or own your own business, do not use TurboTax. Get an accountant.
Oh, that definitely is right.
But if you're a W-2 or you're getting, you're straight, and especially if you're an accountant, you're your CPA. I mean, you've got to, if you're an accountant, you should be doing your own taxes. But keep in mind, from what I understand, accountants get audited regularly.
I mean, I don't know if that's true, but some do. But I guess my point is, right, like there's people out there that are like blaming the tax politicians or blaming the tax preparation industry.
Right, sure. For what?
For the cost of complying with the tax code that they created.
Right. Right.
So and it's kind of ironic, right? It's like, it's like, well, these companies exist because complying with the tax code that Washington created is so challenging.
Right.
For the hundreds of millions of taxpayers.
100%. Right? 100%. Right.
Right.
Of course.
And so these companies came up because they were a solution to this problem that Washington created.
Right.
Right.
And when he says Washington, D.C., not General George Washington.
Correct. Yeah.
Right.
No.
Hey, just gotta say it.
And I think the irony too is then we have then the same folks are saying, and I'm purposely not naming names, but
of course not. Yes.
People can look up who's saying these things, but
right.
The bottom line is, it's like, well, no, the IRS should just provide a free filing tool. Well, the IRS can't even open its mail and process it in 2 to 4 days.
Right.
You want them to create something that's going to allow taxpayers to file for free, like. That's an insane solution. I mean, probably a better solution, right? Would be, well, maybe we have these private companies that are doing a pretty good job with their products.
Right.
Okay. You give, if you're a low income taxpayer, you get a credit, and that gets, or they just pay these companies, the IRS can pay the companies per low income return that they prepare, and then it doesn't cost the taxpayer, that individual. Of course, it costs us collectively, right?
Right, of course.
Our government. But I mean, the idea that the IRS can kind of do this is, to me, crazy.
Yeah, ludicrous, based on the plethora of 60-day letters I have.
Yeah.
I'm looking at my desk. So in short, pay your taxes, pay them on time. Don't ignore any letter that you get.
No.
Yeah. Contact a professional if you can. I mean, I know the IRS has tax advocacy, because with this refund, I've been going through and actually calling these places myself, because my accountant's like, there's nothing we can do. And of course I believe him, but I don't. So, I go on and they just say, you just got to wait. So there's really like tax advocacy services you can do. I did an audit on my own taxes. to see, because I had owed money 1 year, and then so I paid that, and I'm like, okay, where did that money go? Because I paid it, and then I got another notice saying that I was getting like $4,000 of that back. So I'm like, wait a second, and I knew that was supposed to be going someplace else, and it all wound up going to the same place. But I mean, not same place, but where it was supposed to go, it wound up becoming distributed, and it was accurate. But to actually find out where it went was a challenge.
Yeah.
Took hours, and a lot of the numbers that you call that are on the website or on the internet are dead. Like, you're not getting anything.
No,
You're not
it takes hours. Even there's a special practitioner priority line.
Yes, correct.
It can take hours to get through on.
Right. So,
and
yeah, if it's I mean, those are the two, those are the few, key points to, and then, watch what you're doing in your schedule. See, I'm thinking everything should be accountable for, right? Making sure that you don't have, just some pass-through shit that isn't, that you can't explain.
You want good receipt. You need to be able to substantiate everything you're claiming. If you've got a business and you're getting expenses, you got to substantiate.
I don't tell you, as a business owner, you could get quite creative, in what you're doing. You just have to tie it to what you do, which is easy enough to do. And I don't understand why people can't do that. Even if you open a business and let's just say, I don't know, you have a blog or something, not people are blogging anymore. Let's say you want to embark on it as a YouTuber, right? I mean, we earn money from this stuff. I mean, you can, associate a lot of expenses with developing content for your program. And that's legit and real. And so, and why people, again, you said, like, it's the same, like, self-defense in any form, whether it's against the IRS or against, individuals or against active shooters. I mean, there's denial, there's complacency, and that's when you get into trouble. Is just ignoring it. It'll go away, even though maybe years from now, when it rears its ugly head and comes back and bites you in the ass, you're done. So you've got to really, take care of it. And look, you'll hit, like, if you get something right, and my experience, like, I hit it back to them, it's like months, if not a year, before you're getting something back. So you can keep it going, right? And a letter from your accountant also, like, stops a lot of interest and penalty. You can get, like, I've got an explanation letter from my accountant, because we make mistakes all the time, where it's like, okay, we've cut this significantly,
just to clarify on that, right? So, please. Interest accrues so let's say you have a balance due of taxes, so you owe $5,000 in taxes. Then maybe you get a penalty for $1,000 or $2,000, right? Well, interest accrues both on the tax due and on the penalty.
Right.
If you get the penalty removed, the penalty and the interest get removed from the balance.
Right.
But the interest on the $5,000 taxes due that can't be removed unless you get that $5,000 due reduced to $4,000, $3,000 to nothing, right?
Got it. Yes.
So that's kind of how that works. One thing I was thinking about, though, when you were talking, and I would recommend to people out there, is go to irs.gov and establish an online account. Now, I know there's lots of tinfoil hat people out there that, and maybe not even when it comes to IRS, they're not even tinfoil hats, right? Is freaked out about that. But, if you go on there and you establish an account at irs.gov, you can get access to your transcripts. So you get to see a lot of what the IRS knows about you, has about your account, and you can get it online without waiting. It takes a while to set up the account.
Yeah.
Because of all the various, kind of like privacy safeguards that they have built into the site. But, I've said a lot of critical things about the IRS on this, but I think that, they have done some good things, like their power of attorney upload on the website is very good, which a power of attorney is so if you as a taxpayer wanted us to represent you, we'd send you this form 2848, you fill it out, we upload it, the IRS processes it. Been having a lot of success with the uploads. They get that processed a lot quicker than if you fax it to them.
Right.
Which, by the way, they still primarily do a lot of things through fax. This is in 2022. And to my earlier point, but they do have they've really improved their online account for individual taxpayers. So you can go in there and see, your transcripts, at least for the last, it's like 4 or 5 years.
Right.
Things like that. So.
Right. So, dude, how do you get to, this point, moving from the prosecutor's office, basically, the criminals, dealing with, putting bad guys in jail, to tax. This concludes part one with Mike Mitchell. Join us next time when Mike talks about how he got into West Point, even though he didn't have what someone would consider great grades. They were good grades, but not great grades, and great SAT scores. I think you'll find that interesting because he found a way, as he does with everything in his life, to make things happen. Please, again, as always, like, subscribe, and mash that notification button, and you'll be notified as soon as we post something new. Again, thank you so much for joining us today. And, of course, you can contact Mike if you have any tax issues with our good old friends at the IRS. His email is in the description. So until next time, stay safe, and as always, train honestly.